Hello student, welcome back to IBS. Now we need to understand about current versus non-current classification. Okay, asset and liability on the balance sheet are classified as an current asset or non-current asset. Non-current asset are more than 1 year or more than one operating cycle. Operating cycle is or 1 year, whatever it is. Okay, if it is less than, then that will be considered as an current. Okay, if it is more than 1 year or current cycle will be considered as a long term. So what is operating cycle? We'll take example of inventory. Okay, so you paid cash, okay, to buy this inventory. Okay, so today you paid cash and you purchased the inventory. Now you sold this inventory after 30 days. Okay, you keep this inventory for 30 days. So after 30 days you have sold. So now you raise the bill. Okay, invoice for sales invoice. Okay, and you have recognized the revenue. He will pay you after 30 days to 45 days. Okay, so now you recognize your revenue, so your inventory has been moved to income statement in cost of goods sides, and sales you have booked, revenue side you have booked your sales. Okay, so now after 30 days you will get your cash. Okay, this cash has been generated for how long? 30 days. Suppose 30 days this and 30 days this, 60 days. Okay, so after 60 days you are receiving your, so this is called operating cycle. But still, if you are buying this inventory based on credit for maybe 30 days, so that 60 days will be reduced by this 30 days, then your operating cycle will be considered as a cash conversion cycle, not operating cycle. So this is called operating cycle. Okay, and when you reduce this, that is called daily payable outstanding. Okay, and this inventory conversion is called day inventory outstanding. Okay, and when you sold this and you are waiting for this 30 days, that is called day sales outstanding. So day inventory operating cycle minus your DPO, daily payable outstanding, will be considered as a cash conversion cycle. So this is actually being considered how much time cash take to convert again to as in cash. Okay, but operating cycle is between cash, inventory, cash again. Okay, this is called operating cycle. So if any asset which is going to be more than that time, so that will be considered as a long term. Okay, or 1 year. Okay, any of two. So normally company consider 1 year is considered as in current and more than 1 year is being considered as a long term, because operating may go beyond 1 year also. For example, construction business. Okay, construction business, you will buy raw material, you build the building, and then you do all the electrician work and so many things to be done, then it take more than 2-3 years. So then that operating cycle will not be considered as a current asset. So that is the reason it has been restricted to 1 year. Okay, so I think I'm clear with regard to current and non-current. Okay, let's read it out. Expected to be converted into cash or used up to within 1 year. Okay, or any benefit or something you can use within a year. Liability expected to be settled within a year. If anything is due, like accounts payable, you have buy some product on credit. Okay, so that will go to your accounts payable liability side. Okay, current liability side in balance sheet, because, and if you pay within a year, within 365 days, so that will be considered as a current liability. Okay, if you think you are not going to pay within a year, you need to move it to from current liability to long term liability. Okay, balance sheet. Non-current is expected to provide benefit beyond 1 year. Okay, what is the definition I have given for asset? It is similar thing. It is saying if you are going to get benefit more than 1 year, for example, building, land, you will invest an amount of money to buy this building and land today, but you will get benefit consistently more than 1 year. Okay, so that is the reason that will be your non-current asset. Similar condition, you are going to settle after 1 year, like this one, you have due something, you will not pay today, you will pay after 365 days. Okay, or more than operating cycle, then it will be considered as a non-current liability. Okay, current is short term. Okay, settled and converted within a year. Non-current is long term, settled and converted beyond 1 year. Okay, I hope it is clear to you. I think we are done for the day. We'll see you into the next session. Stay tuned. Thank you very much.